Hello, and thank you for joining us for the St. Paul Teachers Retirement Fund Pre-Retirement Planning Seminar. I'm the SPTRFA Director and CIO, Phil Tensick. I'm joined today by our member benefits team, Nancy Langer, Katie Dizelle, and Katie Prokop, as well as our plan admin, Tammy Zielinski, who will be running the slides for us today. Our agenda, first we'll take a brief overview of the plan and how it operates. Give you some legislative updates. Then we'll talk through how to read your benefit estimate and how to get them, what you need to do as you're preparing for retirement, and once you're ready to retire, what are those final steps to get your retirement processed. So how our plan operates, we're a defined benefit pension plan. So that means each month you'll make contributions. Tammy, we can go to the next slide, please. You'll make contributions that are withdrawn from your paycheck. Those are matched by contributions from St. Paul Public Schools and some supplemental aid from the state of Minnesota. Those contributions are sent to St. Paul Teachers Retirement Fund. We will then invest those throughout the working life of our members, and we'll handle the asset allocation, manager selection to make sure those are properly invested. We also administer the plan, so selecting service providers, and our staff handles all of the administrative items from onboarding new members all the way through the retirement at the end of their working careers. The plan also advocates for our members at the legislature. So the legislature sets the plan design and funding. So we educate our legislators on how to improve your benefit plan. Finally, once our members do leave St. Paul Public Schools, they'll have two options, either to retire or to receive a refund. If you're not vested, so you have less than 3 years of service, you'll receive a refund of your contributions plus interest. If you are vested, though, generally your best option would be to retire from St. Paul Teachers. And the size of each of these boxes is roughly to scale as well. So you'll notice that the member contributions are significantly smaller than the retiree pensions. That's because our members tend to receive all of their contributions back in retirement within 3 to 4 years of their date of retirement. And then for the kind of remaining 15 or 20 years that they may live, those are all funded by the investments and matching contributions that were put into the fund throughout their working career. How the plan is overseen, this is a member-driven organization. So our members elect a board of trustees. It consists of 10 members. 9 of those are member-elected trustees. So they come from the membership, and they are advocating for the membership. There are 3 that are elected each year, and so there's 3-year terms for those members. There's also a ex officio member from St. Paul Public Schools school board that helps oversee the board. The staff is overseen by the board of trustees. As I mentioned, I'm the director, introduced the member benefits team and Tammy. We also have Dave Andrews and Cynthia Foster, who are in the finance and accounting department to help administer the plan. As a defined benefit plan, we make great promises, and so there's a good degree of governance and oversight to make sure we're able to keep those promises throughout the lifetimes of our members. We mentioned the Board of Trustees and the state legislature that sets plan design. We also are audited annually by the Office of the State Auditors to make sure we're accurately reporting all of our assets and liabilities. We also employ an actuary. This is a firm that projects out what the future pension benefits will be and how much we need to be contributing to make sure that we do fund those future benefits. Also mentioned that we do invest our members' funds. So we do have a investment consultant that helps with our allocation and manager selection. That's Makita Investment Group. Finally, all of the assets are held in a trust at our custodian bank, which is US Bank. And with this being a trust, that means all of the funds have to be used for the benefit of our members exclusively. Finally, we can do a legislative update. As of July 1st of 2025, the normal retirement age for all members, active members, was reduced from age 66 to 65, so they're now able to retire 1 year earlier with an unreduced benefit. In addition, in May of 2023, we were able to implement a career rule. So our teachers with 30 years of service can receive an unreduced benefit at age 62. These two big benefit improvements did have a cost to the plan. That cost was split between St. Paul Public Schools and our teachers. And so you saw contribution rates increase in July of 2025, and you'll see a small increase in July of 2026 to fund those. Currently, the rate is 8.75%, and it'll increase to 9% in July 1st of 2026. So now we've covered the plan at a high level. I'm going to turn it over to Katie, who will start getting us into the pension terms.
All right, thank you, Phil. So today and throughout your career, you will hear common pension terms. So we briefly want to pause and just highlight a few of those for you. First, a vested member is a member who has earned at least 3 years of retirement service credit, guaranteeing them a lifetime benefit. Deferred pension. This is a delay of the start of benefit payments by a vested member who terminates St. Paul Public Schools employment. Normal retirement age. This is the age at which a member becomes eligible for an unreduced St. Paul Teachers Retirement Fund Association retirement benefit. Early retirement is retirement before that normal retirement age, resulting in a lower monthly benefit amount. Early retirement reduction factor. This is the factor by which a pension benefit is reduced. This factor is based on how early a member begins their benefit. Final average salary is your highest 5 successive years of salary. St. Paul Public Schools retirement and SPTRFA retirement are two different things. St. Paul Public Schools retirement is a member who resigns from St. Paul Public Schools who is eligible for health benefits, and SPTRFA retirement is the commencement of a member's regular SPTRFA monthly benefit payment. Unreduced. An unreduced benefit means there is no actuarial reduction from a member's normal retirement age. A very popular question we are asked is, how is my pension calculated? First, we take your final average salary, which again is your highest 5 successive years of salary. We multiply that by your retirement service credit. In order to receive a full year of retirement service credit, you must work a minimum of 170 days. We multiply that by your percentage multiplier. You will receive a 1.7% for any years worked through June 30th, 2015, and a 1.9% for any years worked July 1st, 2015 to present. And this will equal your unreduced benefit. If you retire prior to qualifying for an unreduced benefit, your benefit will receive an early retirement reduction. There are several ways to reach an unreduced benefit. Again, an unreduced benefit means there is no actuarial reduction. You can reach your normal retirement age, which is currently age 65, but in some cases, for deferred members, it may be age 66. You can reach 62 and 30, which means you're at least 62 years of age and have 30 years of retirement service credit. You can also reach this milestone by purchasing refunded service from SPTRFA, Minnesota TRA, PARA, or MSRS, or by purchasing out-of-state service, which is service from another public pension fund in another state. And you can reach your rule of 90. This is when your age plus your service credit equals 90 when added together. This is for Tier 1 members only who were hired prior to July 1, 1989. I'll now go ahead and pass it to Katie.
Thanks, Katie. So when you request an estimate from us, this is what it'll look like. It can be a little bit overwhelming because there's a lot of information on it, so we're going to break it down a little bit for you. The first thing that you'll notice is that there are 5 lifetime options to choose from. No matter which plan you choose, you're going to get paid the rest of your life. You're just deciding what happens to the funds after you pass away. A few things to keep in mind is that each option provides a different level of coverage for your beneficiary or survivor. The amount of your monthly pension also depends on which option you choose. And it is worth noting that you must choose carefully because this is a permanent decision that cannot be changed once you retire. So as you can see, there's the 5 different options. All members have the options 1 through 3. If you are married, legally married, you have the options of 4 and 5 as well. We're going to explain the different options now. The C1 member life only is exactly what it sounds like. It is for the member's life only. So in this case, the member would receive $22.56 per month for the rest of their life. And then when they pass away, the account closes. Now, you look at the C2 guaranteed refund and notice it's slightly less, about a $5 difference in this case per month for the member's lifetime. But what the guarantee there is that if the member should pass away prior to recouping what they've put into the SPTRFA fund, their beneficiary will receive the remaining balance in a lump sum payout. Typically, it takes anywhere from 3 to 4 years for a member to recoup their contributions. So, for example, let's say you retired and had $100,000 and you recovered $75,000. There's still $25,000 left that we would pay out to your beneficiary. The C3 option is our 15-year certain option. You'll notice the amount decreases again slightly for the members, goes down to $22.18 per month for the rest of the member's life. But it provides a 15-year term. So the clock starts ticking on the day you start receiving your pension. If you are still alive 15 years, you're still going to receive that $22.18 per month for the rest of your life, but the beneficiary will no longer apply. On the other hand, if you were to pass away 10 years into retirement, there's still 5 years left on that 15-year term that we promised to pay someone. So your beneficiary would continue receiving, in this case, that $22.18 per month for the remaining 5 years. And then on the 15-year anniversary of the member's retirement date, the account would close. If you are legally married, you have the option to choose a survivorship plan. The C4 is the 100% joint and survivor option. You'll notice the member would receive $21.14 per month for the rest of their life. And then when they pass away, the spouse would receive exactly that same amount for the rest of their life. The C5 is the 50% joint and survivorship. The member would receive $21.83, but then upon their passing, their beneficiary or survivor, spouse in this case, would receive half of that or 50% of that amount for the rest of their life. It's also worth noting that if your survivor should pass away before you do and you choose a C4 or C5 option, we will bounce you back to the member life only amount for the remainder of your lifetime. The reason we do this is because we're no longer passing on the cost of that additional lifetime benefit to you anymore. There's one other decision that we're going to look at when you are retiring. When you're retiring with SPTRFA, there are 3 big decisions you must make. The first is when you're going to start your pension. The second is the plan option that you're going to choose. And that third decision is whether or not to accelerate. Now, keep in mind, acceleration is only available to those members who are under the age of 65 at the time they start drawing their pension. This is because you can only accelerate up to age 65. Some reasons for people wanting to accelerate are because they may lose health insurance when they retire through the district prior to age 65, and Medicare doesn't kick in until age 65, so they want a little bit more money up front to get them to age 65. Accelerating is basically front loading your pension. You have the option to take more up front for a shorter period of time. If you look at the top image on this slide, you'll notice that the normal amount would be $22.56 for this member. But if they chose to accelerate, they would take $32.04 per month until they turned age 65. But then when they turned 65, the amount would permanently decrease to $11.28 per month for the rest of their life. And now I'm going to turn it over to Nancy, who is going to talk about combined service.
Thanks, Katie. Combined service annuity. Combined service annuity, CSA, what is it and why is it important? CSA is a special portability for members who have allowable retirement service credit with more than one Minnesota public pension plan. Besides St. Paul Teachers Retirement Fund, the other Minnesota public pension plans are Teachers Retirement Association, TRA, Public Employees Retirement Association, PERA, and Minnesota State Retirement System, MSRS. Are you eligible for CSA? You might be eligible for CSA if you have at least 0.5 or 6 months of allowable retirement service credit with one or more public pension plan to meet vesting. What are the advantages of CSA? Under CSA, all Minnesota public plans work together so all your public retirement service credit can be used for benefit eligibility during your career. CSA considers your first public employment date for tier coverages that will be considered for the Rule of 90, the SBTRFA 62 and 30, and any unreduced benefits for normal retirement age. May also help maximize your pension benefits for all plans. Use the same final of your salary from the highest 5 successive years, no matter when or where it was earned. May help meet vesting requirements and for you to reach your pension target date. If you change jobs in the public sector, your pension coverage switches to a different public plan. Your contributions or retirement service credit are not transferred into the new pension plan. They stay in the pension plan where the contributions and retirement service credit were earned. What you need to do when you plan to retire? Prior to retirement, you should contact all your Minnesota public plans that you have retirement service credit with and request a current pension estimate and applications. It is important to note that at retirement, you must submit an application to each public pension plan, and in return, you will receive a pension payment from each of these plans as well. Deferred pension. A deferred pension means delaying the start of your pension to a later date. Perhaps you plan to separate your employment with the St. Paul Public Schools, but you are not ready to draw your pension. You can defer your pension. What is a deferred pension all about? Deferred pension is an option for members with at least 3 years of retirement service credit, meaning you're vested, may begin your pension at age 55 or later, separate from your St. Paul Public Schools employment. You may qualify for meeting the requirements for an unreduced pension that include the Rule of 90, 62 and 30, or normal retirement age. You can defer your pension for reduced pension. Just note that early retirement factors will apply. Your deferred pension date will be the first eligible pension date after receipt of your retirement application and required documents. Now I'll pass it on to Phil to explain the deferred calculations in table format.
Thanks, Nancy. We received many questions about the decision to defer versus continuing to work. So I wanted to provide a graphic example of the decisions our members face. So the earliest retirement date available for members is when they turn age 55. So once you're eligible to retire, kind of each year you would face the decision, do you want to continue working or retire or defer? And so if you were to retire at any point, you start receiving your pension on a monthly basis. Here it's the $2,256. Alternatively, if you choose to continue working, you'll see that your pension grows every year. So from 55 to 56, it would grow from the 2,256 to 2,585 if you continue to work. And that's because of two things. One, you're gaining an additional year of service credit, generally at a slightly higher salary as well. Additionally, you're eliminating 1 year of the early retirement factor. So as we've mentioned, if you retire before an unreduced benefit, there's early retirement factors that apply. So each year you work, it grows because you've gained service and reduced the retirement factor. Kind of the middle option is that you could stop working. So you could resign from SPPS, but delay the start of your retirement. So if you defer your retirement, it's still going to grow from age 55 to age 56 because you're eliminating 1 year of that early retirement factor. So if we play that all the way out from age 55 to an unreduced benefit for this member, they had 30 years of service, so they could retire at age 62 with an unreduced benefit. You'll notice that if they started to draw their retirement, it does not grow from that point until they hit their normal retirement age when the first annual increase would go into effect at age 65. However, if they deferred their retirement from age 55 to 62, their monthly pension would more than double from the 2,256 to 4,941 per month. Additionally, as an unreduced benefit, annual increases apply immediately. So you see that the benefit does grow each year from that. If you do decide to defer, it's in your best interest to take your pension as soon as you hit that unreduced tier, because a deferred retirement does not grow any further once you do hit an unreduced benefit. So we do encourage you to make application as soon as you hit that, either your normal retirement age or your career rule. With that explanation, I can turn it back over to Nancy to talk about the application process.
Thanks, Bill. Application forms and certificates. All required application forms and supporting documentation need to be returned to us before a payment will be issued. The application forms include application for retirement annuity, direct deposit, federal W-4P, and the Minnesota W-4 MNP forms. Retirement application. You will complete the SPTRFA application that includes selecting your lifetime options, designating your beneficiary survivor, depending on your lifetime option selection, and notary for you and your spouse if married. Direct deposit. Benefits are electronically deposited on the first business day of the month. For example, if the first happens to fall on a Saturday or Sunday, the deposit will be on Monday. Federal and Minnesota tax. We will withhold federal taxes based on your W-4P form and the Minnesota taxes based on your W-4 MNP form for Minnesota residents. The tax withheld will be deducted from your gross benefit payment and forwarded to the IRS and Minnesota Department of Revenue. You can also make a change in withholding any month. Supporting documents that we will need are we require that the certificates include your signed valid passport or birth certificate along with your driver's license. And to decide to go with one of our joint and spousal survivor options, the C4 or C5, we will need your spouse's signed valid passport or birth certificate along with your driver's license, and your marriage certificate. Just remember that if you are divorced during or after your employment with St. Paul Public Schools, we will need a certified copy of your divorce decree. And next slide.
All right. This is what your application for your retirement annuity will look like. I will now go through each section of the application just to help you complete your application. Section A, this is your general information. It includes your date of birth, social security number, marital status, resignation date, and pension date. Your St. Paul Public Schools resignation date is the date you last worked or resigned with St. Paul Public Schools. Your SPTRFA pension date would be on your latest SPTRFA pension estimate. A few questions to answer. Have you been involved in marriage dissolution, divorce? If the answer is yes, during or after your St. Paul Public Schools employment, you will need a full certified copy of your court-signed divorce decree and submitted to SPTRFA. Do you have retirement service credit in another Minnesota public pension fund? The retirement service credit record can be current, deferred, or withdrawn. If so, mark the appropriate box by the retirement plan, TRA, PARA, or MSRS. And just a quick note, check MSRS if you worked and earned retirement service credit. This does not include MSRS Deferred Compensation Plan, which is a voluntary retirement savings plan. Section B, this is where you would select your options C1 through C3 if you're single, and C1 through C5 if you are legally married. Section C, this is where if you are under age 65, you would select either the normal or accelerated decelerated. If you are age 65 or older, normal is the only available option to you. Section D, if you selected C2 or C3, this is where you would write your beneficiary's name, date of birth, address, and relationship to you. You can always make a change to your beneficiary by contacting our office. Section E, if you are married and you chose C4 or C5, you would write your spouse's name, spouse's date of birth, and social security number. And Section F, no matter which option you have chosen, if you are married, your spouse will need to sign in front of a notary. Lastly, Section G, this is where you, the member, will sign also in front of a notary. And just a quick note, we do have notaries in our office and we are available to notarize your application. All you have to do is schedule an appointment with us. Once again, I will go ahead and pass it back to Katie P.
Thanks, Katie. So what's next as you prepare for retirement? Review the estimates that we have sent you. Make sure the information is correct and up to date. Also verify that we have the correct information regarding your combined service if that applies to you. If you do not see that you have combined service on those estimates, that means we don't have it on file. Please let us know so that we can get that added for you. The next thing you want to do is to plan on which choice you're going to make. Is it worth it to choose an earlier retirement with a smaller lifetime benefit, or maybe work a little bit longer to receive a larger lifetime benefit? You'll want to select your plan option, and then remember you do always have that option to defer your pension to a later date. You'll apply for your retirement with us, so you'll want to request a SPTRFA retirement application. We're going to go over a checklist of items that you'll want to keep in mind. Your resignation date for your pension, from SPPS must be at least 1 day prior to collecting your pension. Your pension date is either going to be on the 1st or the 16th of the month. We will require the tax withholding forms. There is the federal and the state withholding forms that you'll need to complete. Also the direct deposit form, so we know where you would like the funds sent every month. Please keep in mind that there is a requirement for a period of separation between the school district and when you start your pension and when you can go back. You must have 90 days of separation from your last day with SPPS before you return to the district without it affecting your SPTRFA pension. You'll notice that the earnings limitation on this slide are grayed out. The reason for this is because currently those earnings limitations are suspended. There was a point in time where if you made over a certain amount, we would have to withhold a portion of your benefit. This is suspended through 2027. It is a legislative decision, so if there is a change, we will make sure to update our members. Your first pension payment generally is going to be on the first business day of the month. So if the first falls on a Saturday or a Sunday, you're going to get paid on Monday of that month. Also to note, annual post-retirement increases are set at 1% currently. So each January, you'll see a 1% raise on your benefit payment. Next slide, please. Now we're going to look at some key dates that you might want to keep in mind. These are dates for the people who are retiring at the end of the school year and plan to collect right away. Keep in mind you can apply for retirement at any time. So these are dates that are common for those who retire at the end of the school year. Make sure that you schedule an appointment with us. You can contact us through info@sptrfa.org. You'll want to make sure that you schedule an appointment anywhere from 4 to 6 months prior to receiving your SPTRFA pension. Please keep in mind that the district also has deadlines. December 1st and February 1st are their teacher contract deadlines. You can submit your resignation directly through the SPPS PeopleSoft. Your pension application is preferred by April 15th. This will ensure that we have proper documentation and everything is good to go so that you receive your first payment on July the 1st. Your SPTRFA pension date will most likely be June 16th if you're planning to collect right after you resign with the district. And then your first payment date will be July 1st. Keep in mind that if your pension date is June 16th, we will retro pay you back for that half month of June in your first month's payment in July. And again, please keep in mind the resignation date plus 90 days of separation. You must wait 90 days after your last day of employment with St. Paul Public Schools before returning to a St. Paul Public Schools position without any impact on your SPTRFA benefit. We're going to turn it back over to Nancy, who will tell you the ways you can meet with us.
Hi, meet with us. You can schedule a virtual or in-person counseling session with one of our member counselors. At your counseling session, we will go through your specific pension date. This will include going through your retirement checklist, lifetime options, retirement estimate summary, how to complete the application, and documents required before pension payment will be processed. We will also answer any questions you have regarding your pension. Appointments are available Monday through Friday, 8 to 4. The counseling sessions are around 30 minutes long. To request a counseling session or benefit estimate, you can contact our office by email at info@sptrfa.org or online at our website at www.sptrfa.org. Just a note that you must provide us with a date and a time that works for you and for your schedule, and we will confirm by email. Here's a St. Paul Public Schools slide. Any questions regarding St. Paul Public Schools post-retirement health insurance, sick leave, conversion to severance, and early notification incentive due dates, you should contact the St. Paul Public Schools Human Resource or Benefits Department at 651-767-8200 or by email benefits@spps.org. And now here, if you have any tax sheltered retirement savings covered through your St. Paul Public Schools employment, you can contact the ones listed here that apply to you. Now I'll turn it over to Phil.
I'd like to thank you for viewing our pre-retirement seminar presentation. Hopefully we answered most of your questions, but if there are any lingering ones, or if you'd like to have us prepare an estimate or make an appointment with us, you can see our contact information below on the slide. The best way is the info@sptrfa.org, so we can get those anytime. But thanks again for viewing this, and goodbye.